Hello, everybody, and welcome back to another episode of Babe, the podcast, which is the Bitcoin and Blockchain Evolution. I am your host, Sarah Herring, joined by my co-host, Matt Davio, and our guest for the day, my very personal friend from ages and ages ago, also my CPA, y'all, Theresa Fox. Welcome.
Hi, thank you very much for having me.
Absolutely. Now, we're going to just kick it off. Teresa's going to give us all the nitty gritty. She's specializing at this point in cryptocurrency taxes, which I think none of us know what's going on or what to do. And if at the very least, I think none of us are probably prepared for how much it's going to take. Let's start though at the beginning, Teresa. And, you know, I come from a poker background for those who are watching. And I found Teresa because she was specializing in gamblers and poker players. And I personally can tell you she saved me and my husband a ton of money and also reached back into the bad taxes we'd done before and pulled money out, which I never thought that was possible. Huge kudos to you, Teresa. But now coming into this crypto space, talk to me a little bit about how this evolution, if you will, has happened.
Well, I have been working on crypto investments and cryptocurrency for years, as I've always had clients that, I mean, like yourself, I'm also from the poker background where they strategically have always been in the gaming world. And I think in reality, it sort of started that way. A lot of them saw this as a, you know, who knows what this could lead to investment, and they are willing to take risks. So I've had a lot of my poker players and professional gamblers get involved with this for years, but it only has become as big and crazy over the last year. Specifically when it went from just Bitcoin to, you know, the hundreds of other kind of altcoins out there. And that's when it sort of got a little bit too crazy to just keep a handle on with a spreadsheet. And that's why you really need to find someone who knows what they're doing, and you need to cooperate with them so that they can help you figure this out, because it definitely is not easy. It's so new that you're going to have a lot of people out there thinking lots of different ways to handle it.
So Teresa, I come from a trading background, so I understand the difficulty that comes with different types of trading. How would you suggest people come prepared to you? Because that is key to utilizing your time properly. And I've always said this to other people when they get into trading. I'm not an accountant. You need to hire somebody who specializes in working with traders who can, as Sarah said, go back and figure out where there may be advantages and maybe the taxes weren't done properly, rework. But how does someone come ready to meet with you in the first place? Like, what would you suggest? Like, what are the checklist of things that people should be looking to do before they even come to see you?
Well, it's definitely twofold. And I think that's why people don't realize how big of an issue this could be, or how big of a potential project it is, because a lot of them don't understand what they are supposed to be tracking in the first place. So in regards to your trading background, the cryptocurrency is being treated by the IRS as they would stocks. So someone with a trading background like yourself would at least understand the idea of, I sell one stock, I buy another stock, there's a gain and there's a loss. But in everyone's mind, crypto is crypto, and they don't realize that there's a huge difference between BTC and Ethereum and LiteCoin, and every time you trade from one to the other, it's all a different transaction. Someone with a trading background gets that concept. So what complicates it is it's not just, well, how is this taxed? No one's tracking this, because at least in the trading world, you have these brokerages that will give you these year-end reports that have nice dates and cost bases and when you did what and what quantity. That's not the case right now. These exchanges, first of all, there's how many of them? They're not all US based. They're not all user friendly in regards to giving you this information. So if you're not tracking it, how is someone like myself who wants to help you actually going to be able to help you? So just realizing the need to track it as you go, or how to access that information and the valuable information that is, helps me tremendously, because then I can actually go in and decipher all the different things that you do put together all in one space, and then give you a tax recommendation and consult and actually report them correctly. So it starts well before your meeting with me. I can only help you based on what you give me. Garbage in, garbage out. If you can't give me some good information, I can't protect you or help you or give you the right recommendation.
So for example, like I've been using Blockfolio for a while now, mostly so that I can look at it every day and like want to poke my eyes out because it's terrible what's happening. But, you know, I think obviously this is something that, you know, you can use to see your profits and losses. But at the same time, first of all, what are some of the types of apps and things that you would recommend people use? But also, let's say, for example, like myself, that you didn't start using this until after you'd already done a couple of things. What are some like retroactive things you can at least try to do?
Well, the biggest thing I want to make sure to convey is that looking at it every day, that's, I mean, I'm sure with his background in trading, he can also recommend this to you, but watching the valuations of these stuff go in and out, go up and down every day, one, has nothing to do with me. Okay, that has zero to do with your taxes. Its value yesterday from the value a week from now has nothing to do with me. What we do for you, what the government taxes you on, its value has nothing to do with it. It all is based on the transactions as they occur, not what's going to occur or some convoluted value that someone determines it is as of this date and time. So I don't want everyone thinking, oh my God, taxes are crazy. It's gone up tremendously and I have to pay on this. I should have done my taxes last week when it was lower or whatever. It has nothing to do with the value today. It has only to do with the value the minute you sell it, exchange it, trade it, whatever the terminology you want to use. So once you change it from whatever it isn't into, whatever it is into something it isn't, that's the only time it matters tax-wise. There's always ways to track that in theory. Okay, there's lots of exchanges. Most exchanges you can at least log in. If you can't export it, you can at least see it on screen. You can see the activity. You can see on your bank account when you sent money to Coinbase or whomever. So you can at least see one side of a transaction. I at least can see the USD side on a bank account. It gets tricky when you're doing wallet to wallet or nano ledger to nano ledger and all the other crazy ways that people manage to get money or get Bitcoin to each other. What I don't think people are going to realize is how much they're hurting themselves when they say, oh, you don't have your own exchange, I'll do it for you and give me some. And that you're adding other people's stuff in or family members or friends. And every single time you do those things, even if it's just, I bought it and I passed it through to him, those are reportable transactions. So it gets really convoluted. There's always a way to find it if you want to, or there's a will, there's a way. I know you guys can get into your nano ledgers and your Trezors and you can see activity. You can. It's a matter of if you want to, and realizing the importance of doing that. We can see the Coinbase reports and the exports, and we have access to get all of that if you want to. Okay, it's just a long process. The longer you wait to start it, the longer it's going to take for you to do it. We can't help you do that. I would definitely not be helping a client by asking for any kind of security information and doing it for you. You guys are going to just have to figure out how to maintain the discipline of keeping that current and knowing where you are, because your value has nothing to do with what you're going to pay in taxes.
So Theresa, you said earlier, right in the onset, that the IRS treats all crypto transactions like stocks. So when you buy and sell, every transaction you need to submit at the end of the year to the IRS. Now, when I used to trade stocks and options exclusively, I can tell you, I literally would go in with, 5 feet of paper with all these transactions. And again, I had multiple brokers, but it was pretty containerized, and I still had that much paper. So what you're saying, and people just need to recognize this, and this is why I don't trade stocks anymore that often. I'm a futures trader, because futures, if I have multiple brokers, I get a 1099 from each broker that says plus or minus X for the year. I don't have to, by law, submit all of my trades because of the way futures are taxed. So could you talk a little bit about that? Because there is one way people can trade, say, Bitcoin and that is today now via the CME and the SIBO, they can trade futures, and that has a different tax consequence, just so people are aware.
Well, first of all, I want to make it very clear. If that's what you're doing for a living, there are different ways to report that than just someone who's doing, trading or investments on the side. Okay, so the way you would do your taxes in regards to stock or futures is different than the average Joe who just dabbles in this on the side. Okay, typically everything's done by capital gains. When it's your business, it's taxed a little bit differently, and that's going to be no different than in trading than it would be for crypto. So most of these guys are all doing something else on the side, like Sarah or like everybody else, and they just do some of this on the side. So it's taxed at a capital gains rate. Not every transaction has to be reported. The buys don't have to be reported, but the reason why we need to know about the buys is because the buys influence what the cost basis is going to be going forward. So it's not that it has to go on a tax return. The buy doesn't go on the tax return, only every time you do something with it after that. But we have to know about everything because that determines the cost basis and the amount realized when you finally do an exchange or a purchase or, or transaction, any kind of transaction with it. So we have to know everything. Not everything is going on a tax return, but I don't want people to worry. Just because we say every single one of these transactions has to be reported, that doesn't necessarily equate to dollar signs. Sometimes you're going to have losses too. So just because we say we are adding 5,000 transactions to your tax return, I don't want them to see these huge dollar signs and every transaction equates to tax. It just means it has to be reported, and it will net out as it nets out. Then in addition to that, after we get all of the transactions on there, just your gain or loss isn't necessarily what you're taxed on. I mean, you're taxed at a capital gains rate, and that has everything to do with the rest of your tax life. If you had a good year or a bad year, or if it was short-term or long-term. So I guess the moral of the story is you should know what you're doing before you start getting crazy with it, because my personal observation has been a lot of people think they're making a lot of money because the value of this and the value of that, and they're not realizing the fees. They're not taking those into consideration. So they're doing hundreds of transactions in a day, and the fees that they're going to pay are like the rake in poker. Sometimes you can't beat the rake. They don't realize how much they're spending on fees. They're not realize how they're being taxed. They're throwing hundreds of thousands of dollars or more than that into this, and they have no concept of how it's taxed or the tax implications to them. So that's why I want to make sure people do a little bit more investigating.
Yeah, and I think doing it before they ever even start investing or trading and sitting down with you, I think, Theresa, is very important. Whether, if you're going to open a McDonald's franchise, it's no different. You want to know the tax consequences of that business before you ever get into it.
And what's required of you along the way. I mean, it is incumbent upon you as a trader to provide certain things. So you need to provide certain things. You need to know what they are. We don't have the luxury of having these big brokerages like when it's stocks that provides us tax preparers, nice, neat little packages which import into tax returns. I don't have to do your 5,000 pages of paperwork. So the brokerage does it and imports it. Well, now no one's doing that. So we need some help.
Well, I do want to make a key differential here, and I believe you know. I believe you know this. Stocks are taxed. Stocks and options are taxed short-term and long-term at different rates.
Correct.
And futures are taxed at an even different rate than those two. So people need to understand there are advantages to trading futures from a tax, just on a pure, let's say you make $1,000 this year trading the S&P 500 via the SPY, the ETF, which is a stock. And you make $1,000 trading the E-mini futures, right? So you've made the same dollars. You will pay less taxes via the S&P futures than you will with the same profit. Even though you made the same dollar, you'll pay less taxes. So I know you know this, but the reason I bring it up is because there is an option now for people, again, as part of their strategy that they could look at. If they only trade Bitcoin and they buy and sell, they can actually trade now on the Chicago exchanges futures that go into that futures bucket. and that would save them money. So that was a point I was just making, really to point out that there are a lot of ways sitting down with a professional like yourself before you ever start is probably the best move you could make.
It is, but at the same time, we're not magicians. So when they say, how much am I going to pay on this? Like I can't tell you how many phone calls I got last December, right before year end, when Bitcoin was at its highest, and everyone's like, I want to sell, how much am I going to make? Even if I knew what you bought it for, and I could tell you truly just the gain, that doesn't equal a tax rate, because the tax rate of long-term, short-term has everything to do with the rest of your life. So if you didn't make any other money but this money, then great, you'll be in the lowest tax bracket in theory. I mean, there's so many variables that we can't see the future. So it's almost like you need to know this as you go along, because you're the only one who knows your tax situation, the rest of your life, the rest of your occupation, the rest of your deductions, how long you've held it. A lot of people don't even understand the first in, first out, because in their mind, they know what they sold it at, but how are you determining the basis of when you bought it? Was it the last Bitcoin I bought, or was it the first Bitcoin I bought? And they need to know that now that this is becoming such a hot topic, and that the IRS is really looking for this, they have set parameters for us, and we have to do it a certain way. It's not based on which way you like or what's convenient and easiest. I know it might be easiest to just average all my sales together, whatever. There's lots of ideas, but there are becoming very set parameters on what we need to do, and the penalties are high. My biggest thing I want to make sure to convey is that by not reporting, there actually is a potential of, it could actually be a criminal act. So if you underreport your income by more than 20%, it actually is criminal. It's not just, hey, we're going to get audited and get some fines and penalties in there. If you actively choose to underreport by not putting in this information correctly, it could come back to haunt you. And I know a lot of people think, well, no one can see this and it's anonymous, and you know, that's great that the technology is supposed to be. I know that's why a lot of people love this technology, is that it's, you know, Big Brother is not watching everything. But unfortunately in the US, we've sort of given up that right, and it's incumbent upon us to declare this. And just because they can't see it today doesn't mean they won't. And I don't want anyone to do anything criminal, even 7 years from now, whenever finally the IRS catches up to our technology and is able to somehow watch and follow these digital footprints of these transactions. It's not worth the small amount of tax and small amount of extra tax prep you're paying. So I just want to convey how important it is to do it right from day one. It's a lot easier to go back and find that information now, a year ago, than it is for a couple of years from now, when you're getting audited and now we have to produce it, and that exchange is gone, or you can't find your ID passwords. And you know, it's just a lot easier to do this now and right the first time.
I can't even imagine how many are going to come back losses because like they lost their, they got hacked, or they lost their password or whatever. They're like, I have losses because actually I don't know where my shit is. But
well, it's not even that. I'll be honest. Some of these people, when I show it to them, they're like thinking they're making money. And I go, based on what you've given me, it's either wrong what you've given me, or you actually lost money and you just didn't know how this was working.
Okay,
and
so
it's
that's
actually happened.
That's what I really wanted to ask you. So obviously you've been in the game for longer than most of us, because of the fact that you've just, you know, for those of us who came into this in 2013, 2015, 2016, obviously you've seen a lot more of sort of the real life.
What not to do.
Yeah, well, you've
seen,
exactly. You've seen everything sort of from the get. So what I wanted to find out, and obviously I know you can't like talk specifics about anyone, but just to say some of the things that you've seen, that you've learned, some of the mistakes you can see that are very clear, some of the, obviously just dealing with a lot of people's financials who have been in this for a long time. I feel like you probably have a lot of gems of information that you could just like dump on us.
Well, it's bigger than even what we were already talking about. Just buying and selling, people understand gain, losses, and I'm going to be taxed, right? People don't realize there's so much more that they're doing with Bitcoin that actually has a tax implication to them. That people don't do it anymore. But back in the day, you used to be able to use Bitcoin to like buy whatever, buy services, pay someone into Bitcoin. But when it was really cheap back in the day, now it's gotten so valuable, people are hoarding, you know, and holding on to it. But you used to be able to buy and sell, or buy services or products or whatever with your Bitcoin. And people don't realize that there actually is a tax implication to that, because you bought it at something and the value of what you got rid of is a different value. And those are taxable transactions. For example, say I'm hiring you to do something and I decide to pay you in Bitcoin. Well, how is that taxed? That is still an expense to me, but the only way I get it is by writing off the USD value of that and 1099ing you like I would as if I gave it to you in USD. And on your side, you have to claim it as business income. And then you have now the cost basis of your Bitcoin or whatever kind of currency I sent you to move forward with for your exchanges. So it's still, there's so many intricacies that have nothing to do with just choosing to buy and sell.
Is there an amount, like a set amount yet, you know, where it's like, oh, you can't bring 10K into the US, or like, oh, if it's under $1,000, I don't have to, like, is there, or is it just literally everything needs to be?
Any transaction, you literally could just say, I went from USD to BTC, and then the next day I wanted to change my BTC to Ethereum, and then the next day after that I went from Ethereum to LiteCoin. Each of those is its own transaction that has to be on a tax return. Unfortunately.
But what if I get like my hair cut and I paid like 0.004 or something, and now is that really, can't it just be like spending US dollars? Like, who cares?
But in reality, you didn't spend the same USD as when you bought it. So it has everything to do with the cost when you buy it. So say, like, for example,
US dollars value fluctuates too, doesn't it? Like, doesn't every currency's value fluctuate?
Only in comparison to other currencies. Everything, unfortunately, in regards to this has to have some kind of magical USD equivalent. So if you literally went from LTC to BTC, nothing touches USD there, but it still has to be transferred into a USD for your tax return. That's why we have really great software that does all this for us, that we sort of dump all of this information to it and then let it sorts it chronologically based on what you did, so it knows what the cost basis is. And if you don't give us everything, it can be completely off.
I would highly recommend, as a trader, keeping a daily, if you're active, for sure, keep a spreadsheet. It could be as simple as date, how much you bought, when you bought it, and then selling, how much you bought, and when you sold it. And to Teresa's point, if you're doing transactions across, and then I would add in things as you get complicated in your business of transacting. So where you bought it, which exchange, what date, again, did you buy it? Then, Sarah, if you bought it at Coinbase, and then you sent some money to your hairdresser, well, yeah, put that sale down to the hairdresser. And every transaction you make in a spreadsheet, and use Google Sheets, so you can start right there with the basic items. And then as you add to the flow of things that your transactions are getting more complicated, or across more exchanges, or that exchange went out of business, I lost $10,000. You need to put that date down, when that happened. Again, track all this stuff.
Even if that is just for memory purposes, because say we can import from other exchanges, but there's always going to be funky transactions that, just getting it to there in the first place, or wallet to wallet. Wallet to wallet is not a reportable transaction, but we still need to know where it is, right? Because if we say one wallet sold, we need to know where we got it from. So all of these transactions are important, and you're not going to remember them all, especially when I'm asking as your tax preparer a year plus later about, well, how did you get this over here? And you're not going to remember. When you start doing wallet to wallet or friendly stuff or income and you're buying services, you have to be able to know what happened. Now, there is some good software out there that you can use as an individual to track all of your activities. Please. Just like there's good accounting software, but how many people are using that personally? You always wait for someone like us to do it. But there is really good software if you want to track it on your own, literally day to day, where you can put in there your buys, your sells, your trades, your movements, your whatever. But you have to be diligent in doing it. You have to have some discipline, or else, again, garbage in, garbage out.
So
I
what are
don't have
those
to do it for
softwares though
somebody.
that you recommend? What are we talking
There's
about?
a couple that are out there that I've had clients try to use. Again, it's just a matter of if they put everything in there. Sometimes they export right to me. We have a software that we get imports from everybody and we dump it in, and we have to do a lot of manual transactions for the funky stuff. But ultimately, it tells us what your gain or loss is, and then it dumps right into our tax software. So we don't have to re-enter everything and redo all that crazy stuff. So we can help you both not only get it in, but as well as determine the ultimate tax consequences of it. But if you want to do it daily and you want to keep up on it, there are softwares out there that you can use. Bitcoin Tax, Coin Tax. I don't use them, so I don't remember them. I'm sorry, but if there's a whole bunch of them out there that are pretty good.
Sure, we can Google it. Now, I want to ask a theoretical question then. So let's just say, theoretically, hypothetically, whatever, that someone purchased like gold or silver, right? And then sold their gold or silver, maybe at a loss or maybe at a gain, I'm not sure. Is that treated the same way?
Yes. This is treated the same as you would a gold or silver. A lot of people think currency, it's going to be treated like currency, other like currency exchanges, but it does not. This is treated.
What about jewelry?
What
about everything?
Physical, wait, just to clarify, physical gold?
Physical.
Because again, futures on metals.
I don't want none of that paper metal. I want that real metal in my treasure chest.
But I'm gonna bring this point home again, because futures are taxed differently than physical. They're taxed different than stocks. They're taxed different than options. Talk to your tax professional.
Or even a financial advisor, because not everyone's going to get the concept of futures. That's more for someone who does this truly like daily. And I don't know all necessarily who your clientele is that are watching, but if they're all professionally into this, or if this is just someone who is investing in Bitcoin because it's hot right now, regardless, there are different implications for you, whichever one you are doing. And I don't know if everyone's going to understand the idea of what futures are, because I'll be shocked. I can't even tell you how many people come to me that are all about this Bitcoin and that Bitcoin, and they're making money and they're talking like they know what they're talking about. And I ask them one tax question in regards to their crypto transactions from the past, and they're like, I don't know. Like no one was thinking of this when they got into it. It was fun, it was exciting, and it was, oh, I'm making money, and they saw a value go up and down, but they didn't realize the importance of really having to track what you're doing and the implications of it, because all they heard was, anonymous. But
so
it's
that's
not
something I'm curious about, because you said, okay, like starting years and years ago that you were already dealing with people who were getting into the crypto space. I'm actually surprised by that. Do you think that's common, that most people that were investing in crypto 5 or 6 years ago were actually like actively trying to figure out how to do their taxes appropriately?
Well, back in the day, it was only BTC. So it was something that was easily tracked. You couldn't just use it or spend it all that easy. It was more truly just like a buy and sell. And it was from USD to BTC and back again. So we literally could do it by spreadsheets, as long as I got the date and the dollar amount, the USD amount, and we also didn't do everything in these micro, I bought 0.01234 of the Bitcoin, right? So it wasn't all done in this microscopic, it was more round, because it was $100 for one, right? Back in the day. So it was a lot easier to track. Once all these other LiteCoins got involved, and all the different fees and paying the fees and whatever LiteCoin you were buying, whatever altcoin you were buying, like it got really crazy to track, and we had to go find a software to help us do that. We had the concept, but it was really hard to do on a spreadsheet.
So I was actually talking about you to some of my friends who have been in the crypto space for a while, but who are international, and they were super curious. Is in terms of you and your clientele, you can handle really anywhere?
I have lots of foreign clients, especially in the gaming industry. I have lots of clients who come here and need to do tax returns for big poker wins and whatnot in the States. But in regards to crypto, it's not really based on where your brokerage is, it's where you are. So every country is going to have different rules, and I'm sure that you've heard all the different things about this foreign country is trying to eliminate that, and this foreign country is trying to stop this, and this exchange and that exchange, and it can get really crazy, and different exchanges are going to have different issues, which is why it's sort of, you have to do it on your own, not just rely on, I'll always just get it from the exchange. We can handle it, but we really don't necessarily need to handle that kind of stuff for any of our foreign clients, because they're going to need to go by they're told their own country's tax rules in regards to their crypto. But I will state that I have clients here that are literally sending Bitcoin to clients overseas for, say, poker winnings or something, not realizing the implications of that. And that it doesn't really matter where you're sending it to. It's the fact that you're sending it anywhere where you have to report something. It doesn't matter who you're giving it to. So there's so many intricacies and not enough knowledge.
Bummer. I just think, geez, I was all excited. I was living in this secret space, and like, the fruits of my labor were not going to be infringed, but nope, here we are again. We'll tell all of our listeners, viewers, we'll put, of course, a link to your website and stuff in the description box. We will include a few things from your site. I know you've already sent me things to help, get together my own horrific taxes, but tell the people where can they find you?
We're located in Las Vegas. Like I said, we do handle international clients, foreign and domestic. And I know you said I was your CPA at the beginning of the call. I'm actually an enrolled agent, which I know most people don't know what that is. It's a little bit different than a CPA in that it's a federal credential that I get with the IRS. So it's more tax-based than, say, accounting-based, like a lot of people think of a CPA as. But we're a small firm in Las Vegas. We primarily only specialize in the past in self-employed people, mostly professional gamblers. And I did get into this because I had so many professional gamblers that got into this that I saw a huge need, not so much that I wanted to be a, crypto specialist, but I wanted to make sure that my clients didn't go somewhere to get their crypto handled and then didn't get the gaming specialty that we provide. So we needed to be able to offer that to everybody. If you do crypto and you don't do gaming, we're still happy to help you, or we're still happy to help consult with you about what needs to be done or how to set yourself up in the future to be more successful in your own tracking endeavors of this, so that you're not pulling your hair out at tax time, and either are we. We're in Las Vegas. We're a small firm. You can go to our website, which is TFoxAndAssociates.com, and there's information, a ton of information in there about crypto and taxes and how it's done. Lots of information on there, because I just don't have all day to tell everybody the same stuff. So it's all in there. If you have any questions, there's a frequently asked questions part in regards to both gaming and crypto, and a link on how to get a hold of us. We're also on Twitter and LinkedIn and all that kind of good stuff too. So
I'll be hitting you on the LinkedIn and on the Twitter and everywhere. Well, as soon as I'm probably going to expedite. If you think, Matt, we'll expedite this one probably as soon as we can, so that people who are trying to get their taxes ready.
Give Theresa some help too, because they still have technically 6 weeks, I guess, until the initial. But I think this is fantastic timing.
Don't rush it. If you're not ready, get an extension and then take the time that you need to do this right, because we've got, everyone's overwhelmed right now with this deadline, but it's not necessary. Do it right instead of fix it later is definitely the key. So don't worry about the April 15th deadline. Take the time that you need and spend get disciplined enough to give us the right information so we can help you the first time around. You don't ever want to be on the defense. We'd rather be proactive and get it right the first time.
Yep. First time. I'm going to totally nail it this time. I can feel it. Home run coming for me. Well, thank you so much, Theresa. You're just one of my girls, and I really appreciate you coming on the show. I really appreciate you doing my taxes
pleasure.
all the time and crushing. Theresa Fox from TFoxAndAssociates. We'll have the link in the description box. My boy, Matt Davio. That's what I said. All right. Thank you, guys.
Bye, guys.
Thanks.